Welcome to the Brighter Financial Blueprint podcast, where we will explore retirement and legacy strategies for affluent families and business owners seeking clarity, confidence, and intentional wealth design. I'm Megan Clark, RICP, CEO, Clark Financial Solutions advisory firm, helping families create sustainable retirement strategies. Welcome back to the Brighter Financial Blueprint podcast. My name is Megan Clark, RICP, CEO of Clark Financial Solutions. Excited to have everyone tune in today. We're going to be talking about a topic that maybe isn't the most fun to think about, but especially with everything that's happened in the world in the past few years, it's top of mind. Let's dive into long-term care. Long-term care isn't necessarily for everyone. A lot of families create a family plan where the kids will definitely be taking care of mom and dad, and that is the way forward. Some of our clients even giggle at me when I bring up the idea of long-term care insurance because they have a family plan. Let's take a case study really quickly and talk briefly about my dad. My dad passed away back in 2021, and we were so grateful to be able to have so much time with him even after he was diagnosed with stage 4 cancer when I was 18. We had this great time getting him through and into remission, and that was a great struggle with the treatment at Hopkins, etc. But after that, we had a wonderful amount of time with him and did a lot of fun activities. That being said, we knew long-term care would be something that we would definitely need to have covered in the event that something were to happen to him. Given that brief introduction with that topic happened in his 50s. So fast forward to his end of life, and he actually was able to come home from the hospital and be with us in our home for a total of 5 months before he passed away. But during that time, he needed extensive nursing care. He came home with a lot of conditions that required people with an actual LPN to be on duty for him. And so while we were able to take great care of him during the day, in order for us to get sleep at night, we hired nursing care. So that in-home nursing care costs per month over $20,000 just for nighttime nursing. So that cost added up quite a bit. And had we not had a plan for that, it would have been debilitating to our family, and it would have put him in a much different situation where his wishes wouldn't have been able to be followed, which was to age in place at home. And so that being said, that plan was in place and that coverage was able to be provided by his insurance policy. And so he was able to get the best kind of care possible. It's statistically proven that those individuals that have a long-term care insurance policy will most likely receive better care or more extended periods of actual care than just from family members helping out than those that don't have a policy. And I'm not talking just about a traditional long-term care insurance policy. That's not the only way to fund long-term care anymore. A lot of those traditional long-term care insurance policies where you pay every month, and if you don't use it, you lose it, a lot of those policies are in a tough spot. Number one, they underwrote policies for people when people weren't living a very long life a while ago. And number two, those policies often, they have escalation clauses in them. So right when you get to the ages where you might start needing them, the cost of the insurance continues to increase. This used to be the only way to fund long-term care insurance. Here in the DC metro area, we have a lot of government employees that are clients, and some of you may be familiar with the fact that a insurance company that provided the long-term care insurance for that group of employees actually doubled their rates several years ago. So they went out to their employees and they said, hey, you can either pay double the amount for the same amount of coverage, or you can keep paying the same amount and only get half the benefit after they had paid into these policies for decades. So that presents a really challenging position from a planning standpoint to say, how much money do we have set aside for long-term care coverage? And so there are different ways to fund long-term care today. We can talk through some of those in this episode. And those different ways to fund long-term care don't just constitute this traditional policy where if you don't use it, you lose it. So let's dive in. The idea of long-term care coverage for some of our ultra high net worth families seems inappropriate. It seems what we hear a lot is, hey, I have enough money. I don't need to have long-term care insurance. But earlier I mentioned those people with long-term care insurance end up getting most of the times better care and more professional care than those that don't. So a story to go with that, we have a client who met with several years ago now, tried to talk to them educate them about the long-term care options that were available. They said, no, we can self-insure. Okay, great. We'll, put that down as your plan and we'll move forward. Well, one of them fell and had an injury when they were road biking, and they've needed a surgery that then they got infections. They were very healthy road biking all the time, and now they're not healthy and they're having a lot of medical issues. And what's happened, because they said they were going to self-insure, what's happened is the spouse has become the primary caregiver, which is stressful in and of itself. So in that scenario, what I wish I could go back in time and educate them better on is this idea of self-insuring and what it does and the tools that are available. So the idea of self-insuring can work for some situations and some scenarios. In addition, today, there are policies called asset-based long-term care policies, where what we're doing is we're simply picking up that money that we would use to self-insure, and we're putting it at an insurance company, and we're saying, hey, insurance company, if I need long-term care, I want you to provide me benefits. But if I don't need long-term care, then all of this money that is in this policy is going to grow and grow and grow, and that's going to be a tax-free life insurance benefit that I can leave to my beneficiaries. So what we're doing in that strategy and in that scenario is we're simply transferring the risk from our family, from our portfolio, onto the insurance company. That's all we're doing. We're picking up the risk from our own back, and we're putting it on the insurance company and saying, you guys take the risk. Right? And if they need to cover you for long-term care, you have ample benefits that are far outweigh the dollar amount that you contributed. But if you don't need it for long-term care, then the money passes to your beneficiaries as a tax-free life insurance benefit. So we get rid of the problem of if you don't use it, you lose it. And we also get rid of the problem of this idea of self-insurance and the fact that the number one fear among retirees today is outliving our assets. And maybe that spouse that's now that caregiver is worried about spending extra money on caregiving. And so instead, they just do it themselves, burning themselves out, stressing themselves out. And so that can be a great solution for a lot of families to provide long-term care insurance without accessing all of the issues that come about with a traditional long-term care insurance policy. There are other ways to fund long-term care. In addition, there are life insurance policies where instead of just picking up a chunk of change of money and putting it at the insurance company, you can say, hey, I'm going to pay a yearly life insurance premium that's guaranteed to never go up. The premium can never go up. However, that life insurance policy has what we call living benefits or a living benefits rider, where you can access some of the life insurance death benefit during your lifetime if you need it. We use these for long-term care, among other strategies, but there are lots of pros and cons to each of these strategies. And so it's really important that you're working with someone to talk through the pros and cons of this topic, which again, isn't the most fun topic, not as fun as vacation planning or retirement dream house planning, but it's a really important piece so that if something should happen to you and we don't just die peacefully in our sleep, then you're taken care of with the best care possible. Stay tuned for our next episode, which is talking about life insurance. I know, crazy topic, but it's not just for when you're not here.